this short video, we set out how a change in the tax treatment of US exchange-traded funds or ETFs means that such investments must be reviewed to determine the correct tax treatment. The first capital gains tax payment deadline for 2022 is the 15th of December, with the payment deadline for disposals made in December falling on the 31st of January 2023. Investors in US ETFs should be alive to the changes and review their tax position to ensure they are tax compliant to avoid costly interest and penalties. US ETFs are a popular investment product because they've generally been quite profitable, and they've also allowed investors access to beneficial tax treatment under previous revenue guidance. My name is Lauren Clabby, and I am joined in this video by my colleague Kyle Murphy. Kyle, can you talk us through what these changes mean for investors?
Sure, Lauren. Under revenue guidance in force to the end of 2021, investors in US ETFs were automatically entitled to income tax treatment on income derived from those investments and CGT treatment on gains arising from disposals of those investments. They were also entitled to loss relief if they happened to dispose of an investment in a US ETF for less than they originally paid for it. In contrast, ETFs based in the EU, including in Ireland, are subject to a flat rate of tax on income and gains. Currently that rate is 41%. But more importantly, they have no access to loss relief on EU-based ETFs. This lack of loss relief is a big downside, and that made US ETFs a more attractive proposition for investors. However, revenues guidance on US ETFs has changed effective from 1 January 2022 with the removal of the automatic tax treatment that I just mentioned. Now investors need to review each investment that they have to determine the appropriate tax treatment for all US ETFs that they own after 1 January 2022, as the new guidance applies regardless of when the investments were acquired. Investors may have made these investments through either a stockbroker or perhaps personally via a trading platform, but no matter how the investment was made, the investor is responsible for determining if any tax is due and correctly accounting for that tax under the new rules.
So Kyle, picking up on your point that really investors need to review each investment they've made individually, this is going to be very challenging for many of them. Many of them will have taken the tax treatment for granted, which was not unreasonable given the revenue guidance which has been in place. In all likelihood, they probably will need to consult with a tax advisor, won't they, to determine the correct tax treatment?
Oh, absolutely, Lauren. Given our knowledge of the impact these changes could have on investors, we have identified criteria which can be used to analyse US ETFs to determine if an investor has a CGT liability due for the upcoming deadlines, or indeed an income tax liability due with their 2022 tax return, which is due to be prepared and filed next year in 2023. Actually, speaking of income tax returns, an important point to note for investors is that if they acquired a US ETF in 2022 or in a previous year, whether through their stockbroker or personally through a trading platform, they are technically a chargeable person. All chargeable persons are required to file a tax return for the year or years in which they are a chargeable person. So investors in US ETFs may need to review their affairs to see if they have triggered a tax filing obligation for themselves.
Thank you, Kyle. To conclude, the key takeaways from our video are: the automatic tax treatment of US ETFs in place up to 2022 can no longer be relied upon. From 1 January this year, investors must look at each US ETF investment to determine the correct tax treatment, pay tax and complete their tax returns accordingly. From our experience helping US ETF investors, we have identified criteria that can be used to identify the correct treatment. Please feel free to contact Kyle, myself, or indeed your usual KPMG contact for more information on this topic. Thank you for watching.